So on Tuesday afternoon, I spent time with some of my most dedicated traders looking at 20 of the hottest markets out there. I'm talking index ETFs, commodities, stocks, and more. And we looked at my outlook forecast that I wrote back in mid-October to look at where the market was now, see if there's any new forecasts. And the one that I want to focus in on right now this morning is the Qs, okay? The QQQ ETF. So this is tech ETF, if you will, Nasdaq's ETF. Now, this is the chart here that is in the report that goes out to all Outlook Annual members, and I'm just going to pull back the curtain and show you what I see happening right now. All right, so any one of these orange vertical lines are past forecasts that I made. So you can see how useful they were for catching market turns, right? We had a low one day before this forecast. We had a little bit of an acceleration in the trend on this forecast. We had a high one day prior to this forecast, and we had a high one day after this forecast. So for any of you looking to use forecasting in your trading, this should be a reminder that just because the forecast isn't hit right on the nose doesn't mean it's not useful. So it's always beneficial to see if you can find forecasts. Now, if we fast forward and hone in on the more recent action, okay, these vertical purple lines are purple because they were the forecasts that I made in mid-October. Now, they were for price to form a low, which it ultimately did 2 days after the second forecast. This was a window. I expected the price to be much lower though. So the fact that we formed a price low on the Qs up here, still above the October 13th low, remember that was a CPI day, that was a good sign for the Qs and gave confidence that we might see more recovery. Now, I still think there's room for more recovery because we're also getting into a time of the year that tends to have higher stock prices, especially in the broad market, okay? But look at a few things happening right now. First, on the Qs, we have come to 290.87, which is a resistance level that I put in the report, again, back in October. And that's exactly held resistance. Now, what that level is this old bottom from September 6th. I'm a big proponent of GANs, old tops, old bottoms, and more. The other thing going on, which is pretty obvious, is this red trend line. So here's an important lesson, reminder on using trend lines. So if we want to see where this is, and again, it's in the full report, and I'll share the dates with you right here, it connects the December 28th, 2021 high to the March 29th, 2022 high. So notice also, guys, that that's exactly 3 months apart. So here's the twist with drawing trend lines. It may seem obvious, but you won't believe how many trend lines I see other traders draw out in the world that don't meet this basic rule. The more power there is to the high or low used to draw the trend line, the more helpful the trend line will be. So you can see here back in December 28th, that was a significant high for several months. Same thing with the March 29th high. The thing is, you could draw this trend line a different way and get a completely different result. If you only used it based off this early action, instead of connecting out to the March 29th high, we could have connected from December 28th to the little guy right after it, January 3rd. Here's what that looks like when you do that. So you got to still be in snap mode or magnetic mode on your platform. And that's what the level would have been. Now, do you guys see how beautiful that looks, right? It is a valid tentative trend line, which the March 29th high didn't reach. It was touched beautifully in August 15th. So it's not wrong per se. But it's not, in my view, the most reliable trend line because it's using two highs that are very short term. I would rather that anchor be on the more substantial high that came in March, even though this looked a little ugly, okay? Because now we're back at that similar resistance area, but notice, just like back in August, we might trade above it still. So this trend line isn't a hard stop to the price, but being in combination with the return to the old bottom and with the RSI power zones on the daily chart returning to the bear resistance power zone, that's a little more suspect. So if we do one final zoom in on the daily chart here of the Qs, here's what I'm seeing. And this is reflected in my latest research I just posted this morning on the ES and the NQ in the skinny and the mini. I think we're at a critical juncture here. I think there's more likely room to trade lower than higher. However, if we trade lower, I think that downside target is probably this November 8th high at 272.85. Okay, so I'll just throw a black line on there for the visual. So not a huge fall, but something that short-term traders would want to be aware of. I think that's how we're tilted. I don't have a crystal ball though. I never do. So I always prepare myself for, hey, what if my analysis that I'm thinking is going to happen doesn't unfold? Well, if it trades to the upside instead, you can see that I have laid out all these resistance levels, and I'm going to add one more in that's more near term, which is this guy right here at 303.02. So now you have a game plan for those of you who trade the Qs or trade tech or trade anything related to the broad market of how to handle where we are in this juncture. Again, I'm seeing this not only in the Qs, but also on the E-mini S&P and the Nasdaq E-mini, which I just did a full detailed short-term report on in the skinny and the mini. Catch you on the inside.